Okay, so good evening, everyone. Okay, so thank you for joining our webinar today. Hope you guys are doing well. So my name is Shireen from Phillip Futures Marketing, and I will be the MC for today. So during the webinars, if you have any questions, to type them into the question box, and I will address the question during the Q&A sections at the end of the webinars. So next, before we introduce our speaker, please allow us to introduce our company. So as usual, I need to emphasize on our risk disclaimer where this presentation has not been reviewed by Securities Commission Malaysia and is provided to you solely for general information and does not constitute any recommendations. We are not liable for any losses arising based on these information. So investments are subject to investment rate. Therefore, you shall seek advice from quality advisor before making any investment decisions. So Phillip Futures is a wholly owned subsidiary of Capital Holdings Sdn Bhd. It is incorporated on 7th of October 1995. So our headquarters is in Kuala Lumpur and branches distribute across Malaysia such as Kota Damansara, Malacca, Penang, Johor, Kuching, and our Cebu branch at Sarawak and KK branch at Kota Kinabalu. So other than that, Phillip Futures is a trading participant of Bursa Malaysia Derivative Berhad, clearing participant of Bursa Malaysia Derivative Clearing Berhad, and also holder of Capital Market Service License, also known as CMSRL. So next, I would like to take this opportunity to extend our gratitude behalf of my company, Phillip Futures, to our clients. So without you, we are unable to achieve the awards. So in 2020, we achieved 3 rewards from Bursa Malaysia, which is the best overall, the best retail, and the best institutional derivative trading participants. Next, our mother company, which is Phillip Capital, we have office and branches over 14 different countries. So for futures, we cover not only product in Malaysia, we also cover from different exchanges such as Singapore Exchange, CME, CBOT, NYMEX, and more. With our strength of global coverage, clients are able to trade both local and foreign products under the same platforms. Here is the product available in Phillip Futures. So actually, Phillip Futures main focus on product offering, which is futures, and contract for difference, which is CFD. So why should you choose Phillip? First of all, we provide advisory service such as enquiries. Next, we also provide a wide variety of products for futures that enable clients to trade both local and foreign products. Other than that, we send out the latest market news and commentaries to clients every day through email for reference. Lastly, our headquarters have 24 hours brokering and execution support. This is important for clients who trade foreign futures, and also dealer can assist your enquiries anytime. So next, I would like to introduce our speaker for today, which is Chan Yong-Xuan. She is the marketing executive at Phillip Futures. She holds a master in business administration from INTI International College, Penang. With her passion in futures trading, she offers regular personal coaching on products and platforms for investors who are new to futures trading. And she also holds a CMSRL license by Securities Commission. So now let's welcome our speaker for today, which is Chan Yong-Xuan.
Okay, hi everyone. Guess everyone can see my screen now. Okay, so good evening, everyone. Okay, so welcome to Phillip Futures, and my name is Yong-Xuan, and thank you for joining this webinar. Okay, so for today's topic, I will be sharing about the diversify portfolio into the foreign market. So we will be basically focusing on the US market, which is the top 4 US indices. Okay. So yeah, hold on. Okay, in today's webinar outline, I will be sharing about the overview of the major US indices, and then introduction to the micro E-mini indices futures contract, and what are the factors that will impact the US indices movement, and the ways that we trade the US indices futures, and last but not least, we have the market outlook for the US. So what are US index futures? Dow Jones, S&P 500, Nasdaq 500, and Russell 2000 index. All these are the largest index which are highly traded in the futures market. Okay, and about the US index futures. So all these, the Dow Jones, S&P, Nasdaq, and Russell are the most popular indexes, where like Dow Jones, where like Nasdaq are mainly for technology, and Russell 2000 we are focusing on to the mid to small cap companies. So for index futures, like instead you are trading each individual stocks, like Dow Jones will have top 30 blue chips company, in S&P we have 500 index, Nasdaq or 100, and Russell 2000. So instead of trading each individual stocks, so traders can actually gain a broad-based exposure to all the US equities with only one single transaction by trading the US index. So in US index futures, they are able to manage their risk or seek profits based on their view of the overall market. So without further ado, let's go to the first one, key features of the US index. Okay, so Dow Jones Industrial Average, so we call it the Dow or DJIA, will be the first to launch, can also mentioned as the oldest products which was launched in 1896. 1896, yeah. Okay, so Dow Jones is a stock index that tracks 30 of the largest US companies, and also one of the oldest stocks index. It is also performs in widely considered to be a very useful indicator of the health of the entire US stock market. Dow Jones does not include just the industrial stocks, but also stocks from most sectors, except like utilities and transportation, where they were classified as another Dow Jones. And for the weighting method of Dow Jones was price weighted index. And then up until April, the market cap was 10.57 trillion, and the exchanges were under New York Stock Exchange and also Nasdaq. Okay, so these are the top 30 Dow Jones constituents. So from here you can see that like United Health Group, the highest weightage take up to 9.64, and then we have those popular like Microsoft, McDonald's, and then like manufacturers we have like Honeywell and etc. Same goes to, we also have Intel. So all of these, the weightage takes up to 100% of the Dow Jones. And for it also breaks down by sectors. So the largest sectors is the information IT, the information technology, which has 22%. And then we have like healthcare, financials, industrials, and etc. Okay, so the most important thing is the Dow Jones Contract Specification. So Contract Specification is like what are things you need to know before you start entering the market or start trading in the market. So from here, I have one E-mini Dow Jones and also micro E-mini Dow Jones to show you guys about the comparison between E-mini and micro E-mini. So E-mini and micro E-mini Dow Jones both are actually the same. The difference is that E-mini, you will need to trade one lot, you will need about approximately like 40,000, but in the micro E-mini, you will need about 4,000, which is times 10. So for the contract size, for E-mini is $5 times DJIA index, and then for the micro E-mini will be 0.5 times the DJIA. And then same goes to the E-mini and micro E-mini, it's also 10 times, it's $5.50. So the trading hours, contract months, final trading day, and final settlement day are basically the same. So currently, for the trading hours, so currently we are at daylight saving, which means that the market starts at 6 a.m. and it ends at 5 a.m., 1 hour break, and then it will continue to 6 a.m. And contract months, so the current most active contract month for Dow Jones will be on the June month, which means that we are in May, but then most of traders will trade in the June month because these are the active months, March, June, September, and December. And the final trading day will be third Friday of contract month, which means that currently the last trading day for June will be on the third Friday. And of course, because this is an index, so the settlement will be by cash settlement. So next will be on Standard and Poor 500 index. Okay, so when it comes to the major US stocks index, S&P 500 index is the most highly regarded as a barometer of the overall stock market performance. It also takes us as an indicator of how large the corporations are performing. So this index consists of 500 largest companies in the US, and it is also generally considered the best indicator of how the US stocks are performing overall. If you see from another angle, S&P 500 as an index, it performs of the America's 500 largest stock, and also they make it as a benchmark against like which portfolio performance can be evaluated. So for S&P, the weighting method will be price weighted with the market cap of 36.7 trillion. So yeah, for S&P 500, the market cap, the weighting method is on price weighted, and then which means that this company, all the companies under S&P 500 is valued on how much it influences over all the index performance. So each listed company doesn't simply just represent 1 over 500 of the index. So we have like massive companies such as Apple, Amazon, and another 498 companies. And these are the top 30 index constituents. I'll just show 30 companies as if 502 companies, there's too much. So this is just the top 30. So like Apple takes up about 6.99, and then we have Microsoft, Amazon, and then the most popular one, Tesla, and a lot like ExxonMobil, the energy sector, we also have it here. So for S&P 500, the value of the S&P 500 index, it always continuously fluctuates throughout the trading day, also based on the performance weighted market data for the underlying companies. As S&P 500, it takes up 28% of the information technology, and then we also have healthcare, consumer discretionary, financials, communication services, and a few more other sectors. Okay, so it comes to the S&P 500 contract specification. Same for all these indices, they have a bigger size, which is called as E-mini, and also a micro-sized E-mini S&P 500. This is also the size between E-mini and micro-mini E-mini is 10 times. Okay, you can see from the margin here. For the E-mini, we have nearly about 53 to 54,000, and for micro E-mini S&P is about 5,003. So the contract, this one also $50, and then for the micro E-mini only $5, and the minimum tick and value, which is the value per tick, for micro E-mini will be about $125, and if it's the larger size, the E-mini will be $12.50. The trading hours, contract months, final trading day, and final settlement are the same for S&P and Dow Jones as well. Okay, so next we will proceed with the third indices, which is Nasdaq 100. So Many traders also know that Nasdaq is a tech-heavy stock index. However, it is often the least understood of the major indices in terms of composition and how it actually works. So Nasdaq Composite is one of the most widely followed stock indexes in the US, and it is also usually one of the 3 headline indexes that market commentators often cite. So comes along with Dow Jones and also S&P 500. Because Nasdaq has a high concentration of companies in the technology sector, particularly of the younger and fast-growing variety, the Nasdaq Composite Index is often considered to be a good barometer of how well the tech market is performing. So you can see from here, Nasdaq 100, it's a heavily concentrated tech companies with the weighting method of market weighted index and market cap at 15 trillion, and exchanges will be under Nasdaq. So Nasdaq also have 100 companies. These are the top 30 companies of the weightage. So the first one, of course, is still Apple, takes up 13.17%. And then we have Microsoft, Amazon, and etc. But here we also have Starbucks, and then PayPal, Honeywell. When it comes to sectors, you can see, as I mentioned just now, Nasdaq actually takes up the heavy tech sectors, which is technology, takes up more than half of the 100 companies. Technology takes up 59%, and then we have consumer 23, and consumer goods, healthcare, and also industrial. So Nasdaq 100, Nasdaq 100. Same, we have also E-mini and micro E-mini. So the margin here, you can see for the larger size, the E-mini takes up about 74,000 approximately. And then for the micro E-mini, we have about 7,400. And the contract will be $20 times Nasdaq. And for the micro E-mini will be $2 times Nasdaq. And the minimum tick and value also 10 times, which is 5 ringgit for E-mini, and then micro E-mini will be 50 cents. So the trading hours will be the same. Contract months also will be March, June, September, and December. Also expired, the final trading day also on the 3rd Friday of the contract month, and also the final settlement will be on cash settle. Most of the indexes will be settled by cash settle, because indexes only able to cash settle unless if it's commodities. If you are able to deliver physical, then you can proceed with the physical. And for last but not least, we have the 4th product, which is Russell 2000. So Russell 2000 actually was launched in 1984 by the Frank Russell Company, and now actually is managed by the FTSE Russell. So Russell 2000, as you also can see, that it's actually a very broad-based company. So it actually takes up all kinds of sectors. Okay, so Russell 2000 is also one of the most popular index, which doesn't track large companies in the Russell 2000. So it's also widely considered the benchmark for smaller US stocks. That means that 2,000 companies that make up the index don't contribute equally to its performance. Large companies have a proportionally greater impact than smaller ones. So for Russell 2000, the market cap will be at 10.1 billion, and the exchange will be also under NYSE, New York Stock Exchange, and also Nasdaq. Okay, so because Russell have 2,000 companies, so I will only show you the top 10 company. So all these companies are considered from the mid to small companies. So all these are mostly located in the United States, like we have Adobe, Intel also considered, and then AMC, Lattice. Same goes to the contract specs for Russell 2000. Okay, so Russell 2000 also have its own larger size contract, the E-mini, and also a micro E-mini, which is the smaller size. Okay, so the initial margin you can see from here, Russell will be 28,000 and Micro E-mini will be 2,008. So compare with all the products, Dow Jones, Nasdaq, S&P and Russell. Russell actually the margin here is the lowest compared with the other three. So for the minimum per tick and value, also 5 ringgit and 5 ringgit for E-mini and also 50 cents for the Micro E-mini. All the trading hours, contract months, final trading day and final settlement is the same. Okay. So I made a table here, which is the summary of all the Micro E-mini indexes futures, Dow Jones, S&P. You can see from here, it's easier to view if I compare right here. You can see for the margin for all the products, Russell here is with the lowest margin. And then for the highest margin, we have Nasdaq 100, which is the heavy tech stock market index. So for minimum, for contract size, and then minimum tick value. So for minimum the tick and value, which means every point it moves, every 1 point it moves, you make a profit or loss of 50 cents. And gold for S&P will be 0.25 point. You'll make about $1.25, and Nasdaq will be 0.25 point. You made about 50 cents, and for Micro Russell will be 0.1 point. You made about 50 cents USD. So you can see from here for the trading hours, the contract month, the settlement, and also the final trading day, all are the same. So for like Malaysia time, currently we are in daylight saving, and daylight saving usually starts around from March to November, and then when about November to end of April or mid of March, we'll change to non-daylight saving. And then for contract month, March, June, September, and December are the most active month. And then settlement, all of these are indices, so it will be cash settled, and all of the indices final trading day will be on the 3rd Friday of the contract month. Okay. So I will share with you on why trade Micro E-mini indices. Okay. So as I compare with you with all the 4 products, Dow Jones, Nasdaq, S&P, and Russell, I compare with you with the E-mini, which needs about 30K or 40K of margin, with the Micro E-mini, which needs about with 5K, 6K, or 7K. It's actually 1 of the 10 of the E-mini's contract, which means that you need lower capital to enter the Micro E-mini indices. And by trading Micro E-mini, you will trade in a market with more precise and accurate hedging against the portfolio due to you have smaller contract size. And for Micro E-mini, it's actually ideal for beginners, as for traders, for like beginners or new traders who do not have any experience in the futures market and are very interested in trading the US indices, you guys can try Micro E-mini indices. And Micro E-mini and the large size E-mini contract, they have the same movement, but then they have lower volatility due to they have lower tick value. You can see from here the lower tick value. If it's Micro Dow Jones, the Micro E-mini Dow Jones is only 50 cents. But then if you trade in the larger size E-mini Dow Jones, will be 5 ringgit. Same goes to S&P, Nasdaq, and Russell as well. Will be times 10 of the value. As for Micro E-minis is also an alternative new trading strategy before you start entering to the E-minis contract. And of course, for Micro E-mini indices, it will have lower brokerage. So for like the big size, will have lower brokerage compared with the E-minis, which is the largest indices. Okay. Before I forgot to mention to you guys, if you guys have any question, you guys can just type into the question box, and then I will answer to the questions at the end of the session. Okay, thank you. And next, we will continue with what are the factors that will impact the US indices movement. Okay, there are actually a lot of factors which can affect the US indices easily, like the most popular gross domestic product, unemployment rate and jobs report, the consumer price and produce price indexes, inflation, retail sales, industrial output, and then we have recently like Ukraine and Russia, and then like COVID-19. Actually, a lot of things like currency, anything can affect the US indices movement because, like I mentioned just now, one indices like S&P 500, it has a lot of companies. So if the company with higher weightage, they will affect even more. Even though with the lowest weightage, they will also affect the movement of the indices. So for today, I will pick a few to share on how they affect the market. As if it's talk about factors, anything can affect the market. So I will pick only a few which are very important to share with all of you that will affect the market easily. So the first one, we have Federal Reserve announcement. So like 2 weeks ago, they actually the stocks jumped 3% after Jerome Powell comes fears that the Fed will raise interest rates too fast. Okay, and when inflation is at its highest in the currently the inflation is at its highest in 4 decades, and the Fed is quickly withdrawing monetary support as it looks to cool down the economy down. So you can see from this chart here, this is before July 2021, was going uptrend for the performance of S&P, and then it was downtrend and then uptrend, downtrend, and then recently the market is very volatile. So when the Federal Reserve Chair, they announced something, the central bankers weren't considering exceptionally large increase in the interest rate. They also claiming that the investors who had begun to worry that the fight against the inflation might push the economy into a recession. So from this year, it also had created a very uncertain outlook on the Wall Street, that all the traders are questioning whether this is the right moment to own a risky assets like stocks or any other equities as well. As the Fed, which is the Federal Reserve, they could able to go too far as they try to cool down the economy down, and in the worst case, it might cause a recession. So we have the Wall Street analysts, they actually have begun to raise the prospect that the central bank might increase the rate by as much as 0.75 percentage point as one of its upcoming meetings. So every time when the Federal Reserve announce anything, all the markets, the inflations are in a it might be in downturn or it might be uptrend. Okay, and next we have inflation. So previously, around mid of February, the Russian invasion of the Ukraine has added to trouble in the already fragile global supply chain and also raised the energy and food costs around the world. Other than this, past few months, China also the coronavirus outbreak also has added to the bottlenecks and production slowdowns and the driving prices for the goods higher. So, like back to the first point, Russian invasion of Ukraine, they actually has triggered a costly humanitarian crisis that demands a very peaceful resolution. And at the same time, the economic damage from the conflict will actually contribute to a significant slowdown in global growth in 2022 and also added to the inflation. So like fuel and food prices have increased rapidly, hitting vulnerable populations in low-income countries hardest. So for like they also has reported that like the global growth is projected to slow from an estimate of 0.1% in 2021 to 3.6% in 2022 and 2023. So the difference between 6.1 and 3.6 are a few points lower, but are projected in 2023 January. So like they also expected that in 2023, the global growth is forecast to decline to about 3.3% over the medium term as the war-induced commodity increase and the broadening of the price pressure. The price pressure has also led to the 2022 inflation projects. So as you guys also know that recently the inflation in the United States also is climbing at its fastest rate in over 40 years. Okay, so the third one, we have the consumer price index. So consumer price index are very important because of like if it's the raising inflation where there will be higher prices and it can hurt the consumer spending, which makes up more than 2/3 of the GDP and also will cause the Federal Reserve to raise interest rate to control the price gains. So like increase in the indexes for like the shelter, the airline fares and new vehicles were the largest contributors to all the seasonal adjusted at time increase. So when the higher rates tend to cool the economic activity and also have quenched many stock rallies. So like if it's falling inflation and resulting interest rate cuts have the opposite effect, so which ignites the stock rallies. Other than like to all these consumer price index, when the coronavirus in China outbreak, the US futures retreat as the Chinese economy deteriorates. This is because China is one of the largest country in the world. When the Dow Jones futures declined by 50 points and Nasdaq also fell more than 80 points, they were surprised that China coronavirus outbreak will actually affect the US indices movement. And all the traders actually believe that the weakness in China could spread to other countries because China is one of the largest country in the world where their consumer also has the largest spenders over there. Okay, and then the fourth one. The fourth one we have gross domestic product. Okay, so when the GDP is up, there will be, which means that the economy is growing and it actually strengthens the fiscal conditions. Okay, when the GDP is down, there will be a fears of a recession loom. If the GDP stays at constant, it will be the signals that the economy is stable. As GDP, it actually tracks the health of a country's economy. So if the GDP is moving constant, so which means that the economy is very stable. So for GDP, it represents the value of all the goods and services produced over a specific time period within the country borders. Well, we will come back to 2021. So US economic growth is expected to remain positive in 2022. So pending further unexpected inflation and also like geopolitical news, like the atrocities in Ukraine and the continuation of the war, plus there will be Western sections may result in the significant inflationary and supply shortages as we move throughout the year. So in 2022, estimates the GDP growth are roughly about 3% to 3.5%. But it also has been in Q4 of 2021, the GDP did decline at 0.4%. So yeah, so in 2022, traders were expecting that the GDP will grow up to 3% to 3.5%. So the two biggest risks to the outlook will be the overly aggressive the Federal Reserve that puts the brakes on the economic growth in the name of the taming inflation. And secondly, we have continued escalation of the war in Ukraine, resulting in still further sanctions that disrupt the economic activity in Europe. And it will also create a potential significant agricultural shortages for So, okay, lastly, we have the earnings. So you can see from here, earnings in Q2 of 2022, they were expected that in US, the earnings seasons will soon begin, as they call it coming to an endemic. Like S&P 500 index earnings are expected to grow 3.5% from Q1 of 2022, comparing with Q1 2022 with a 10% increase in revenues. And then if it's like the non-US earnings, comparing by a few countries, non-US earnings are also expected to be very solid in 2022, especially in Japan, as they are it has been looked at it's more valuable outside the US to look relatively attractive. Okay, so other than all these factors, if you want to like know more what are the other things that will affect the US indices movement, will be the key data announcement. So for like all these key data announcement, they have their own reporting date. So like the non-farm payrolls will be on first Friday of the month, and then Federal Reserve, they have meeting like every 6 weeks, and then unemployment rate like first Friday of the month, and then initial job claims every Thursday, with durable good order end of every month, and GDP, which the report will come out on quarterly, and the CPI, as I mentioned just now, the consumer price index will be come out middle of the month, and then manufacturing index, first business of the day, and non-manufacturing index. So all these, if you want to know like non-farm payrolls first Friday of the month, so you can just directly Google like non-farm payrolls, and then you will know what are the figures. So these are all will affect the US indices. Anything as long as it will affect the economy of the US, and it will also affect the US indices. Okay, I hope everyone is still with me. And next we will go to ways to trade US indices. This will be on technical analysis. Okay, so these technical analysis are actually being based on my own view. Okay, so Heikin Aishi is actually, you can see stick, but then it's called Heikin Aishi. So it's the green and red. You can see from here. Okay, you can see from here. You can see all these green bars where there is one line up only, which means that there will be no bottom shadows, there will be an uptrend. And if it's red color and no top shadows, don't have these, no top shadows, so then it will be trending down. Same goes to, yeah, if you see something like this, which means that it will goes up. Okay, and then if it's like dojis with top and bottom, which means that there will be congestion, which means the market might be uptrend or downtrend, don't have a very exact direction. And then if it's here with top and bottom shadows, will be turning points. This is also very you have to, which means that it might go uptrend, and then there will be no bottom shadows and go uptrend, but in the same time it might also go downtrend. So when you see this, you have to take note. But then if it shows a very clear indicator like this, or like this part here, and this part here, and this part here, which means that it will go uptrend, and then when it shows bottom shadows here, yeah, it might change the direction to downtrend. So for Heikin, actually, it's very easy to see. You can just see on this candlestick. This is actually based on what I've seen for my side. Okay, so the next one will be exponential moving average. So from here, I'm using 20 days, 50 days, and 100 days. And 20 days will be black, 50 days will be red, and 100 days will be blue. So from here, you can see when the 2020 EMA, which is the black line, the black line, which is the top one, is above the 50 MA, which is the red one, the trend will be bullish. So 20 days, they will be considered as shorter, which means you look in the short term, and then 100 days, the longer term. Okay, so when you see this here, it's quite obvious. When 20 MA, the black one, is below the 50 MA, the trend is bearish. So if when this crossover, and 20 MA crosses below the 50 MA, and the 50 MA is below EMA, the signal is bearish or will be a short trend change. You see when it's uptrend, and then when it change, it's just like this is a 15 minutes bar, a 15 minutes chart, so it will be shortened and then it goes back downtrend. Okay, if you don't need have to view 20 days, 50 days, or 100 days. You can only just view 20 days or 50 days will do. You know, yeah, it depends on how you wanted to view. Take a look on the chart with the exponential moving average. And the third one will be the chart patterns. Okay, this is called wages. They call it as wages. So if this is mostly you have to see some back, maybe this is also about 15 minute charts. Maybe you need to view 15 minute charts, but then you need to view longer, which is maybe 3 to 4 hours before. If it shows a very like the resistance and support, if it shows a falling wedge occurs between the two downwardly sloping lobes, yeah, which means there will be an uptrend. But then if you want to look at the detail on the chart, because this is these chart patterns, the wages will be looking on what happened hours before and the overall chart. But if you want to look like what happened to the next 30 minutes, 15 minutes or 30 minutes, you can also have a look at the Heikin sheet. But if you think that 15 minutes charts is too long, you can view at 1 minute chart, so it will be easier. Okay, so these are the three types of indicators which I'm more comfortable with. So if you guys have your own indicators which you are more preferable, you can just use your own. Okay, next we will go to US Indices 2022 Market Outlook. Okay, you can see from here in April, the Nasdaq 100, it actually tumbled about 13.3%, which is for Nasdaq the worst money performance since 2008. And then while the S&P fell 8.8% and ended at the month of levels lasting in May 2021. So in April and May, and then market participants, they were actually expected that there will be a few number of rate hikes this year. As up until now, we already have 3 rate hikes, and there are actually 6 more months. So the traders are able to see that there are greater than 60% probability that the Fed fund rates will be at least 3% or higher by the end of 2022. So, and next will be on the main cycle risk from the Russia and Ukraine. From February until now, I think the Russia and Ukraine war has not completely over yet. So energy prices, and they have heavily impact on the global growth and inflation. So like food prices given by Russia and Ukraine's will like global wheat and corn exports. And then we also have the disruption of the supply chain. Okay, next will be okay, oil and natural gas. As I mentioned just now, energy prices from the Russia and Ukraine will be affected. Same goes to the energy crisis is unfolding in March. So they were expected then when it comes to winter, they hope that it will be better. And next will be on the US is heading to a new era of elevation inflation. As inflation probably will retreat from near 4-decade highs, as the supply chains unwind and economic growth slow in response to the interest rate increase by the Federal Reserve. But it may stubbornly higher than 1.5% to 2% range that the American consumers, business, and investors grew accustomed to before the pandemic spike. So in this new environment, borrowers from like home buyers to the US Treasury will have to pay more. And in the meantime, there will be also fewer jobs for workers as the Federal Reserve, they actually put a squeeze on the labor markets. So there will be more risk for the traders. And they will have factored in the central banks, which are preoccupied with the cooling inflation and promoting the economic growth. Yeah. Okay. So you can basically, if the end of Russia and Ukraine war, there might be different for the rates for the US. Yeah. So I think that's all for my part. So if you have any questions, you can do type that into the question box, and I will address them. Okay, let me have a look. Okay, so I think we have a few questions from our attendees here. Okay, so we have the first questions. What is the difference between all the 4 indices? Okay, so the main difference between all the 4 indices are their components. As you can see, like Apple are in like Nasdaq, Dow Jones, they are the same, but then they also are different because like Dow Jones only have 30 companies, and then Nasdaq only have 100, S&P 500, and also Russell have 2,000. Another thing is the hold on, let me show you the slides. Another thing is the margin between all the products. Dow Jones, S&P, Nasdaq, and Russell, they have different margin. So you will need about 4,100 to enter Dow Jones, and about 5,003 S&P, 7,004, which is the highest for Nasdaq, and also Russell, the lowest, about 2,008 approximately. And then the minimum tick and value for all the products. So like Dow Jones, it moves by 1.1 point. If it's 2 points, you earn about $1. And S&P 0.25 point, and then Nasdaq and Russell only 10 points. Okay. And what are the So trading hours, we have one question. So trading hours for all the products is about 24 hours. Yes, correct. It's 23 hours. They have 1 hour break. You can see 6 a.m. morning 6 a.m. the next day 5 a.m. So they have 1 hour break, and then they will continue again. So like because in Malaysia, when you want to trade all these macro indices, they are actually, the market is always volatile. But if it will be more volatile when it's at night or midnight. Okay. Okay, we have one question. Hold on now. Okay, I think someone, we have one question here. One question asking, we saw from our website that we currently have one ongoing promotion for the indices. Correct. We have one ongoing promotion for all the US indices. I will share with you guys. Okay, so for US indices, you can trade now at only $2.50. If you want to know more, you can scan on the QR code. It will direct you to our website. If you are interested to open an account, or if you want to know more, you can contact us, and we will have our representative to answer to your question. And we have one question. And we have one question asking about which are the most popular among the four indices. So every indices, they have their own own advantages. Okay, like for Nasdaq, if you are more to heavy tech, I mean if you are more to technology side, you can focus on Nasdaq as it has the heavy tech sectors. And then if it's like Dow Jones, it only has 30 blue chips company, which is the 30 largest company, and it covers all industries except for utilities and transportation. And if it's S&P 500, it covers most of the sectors. And for Russell, it has mid to small cap companies. Okay, let me have a look. Okay, we have one question here asking, so most global market plunges in recent week. Do you think that now is a good time? And how do we know when the market will pick up? So currently, the indices market now remain as bearish, but then as because the inflation rate is high now, so the market might continue to slump. So it also depends on which stock. If it's it also depends on which stock which you are more focused to. Like Nasdaq, if there are any big news about technologies, they have new ideas or anything news coming up, the Nasdaq company, which is heavy in stock, heavy in tech, the market might go uptrend. So like example, banking stock as well might consider, because the Federal Reserve, they might increase the interest rate again, and we are not sure about that. So, and like tech stock, it also not really depending, because it also might continue dropping. And also another thing is that because of in China, the coronavirus outbreak, it also affecting the US market. And because China also has a lot of they also have a lot of tech stocks, so it might be affected. Okay, so from here, if you want to talk to us, you can just contact us. You can, because our working hours is until 6 for the branches, you can leave us an email, or you can go to our website to know more. And or you also can visit our Facebook. Our Facebook, you can just look up for Phillip Futures Sdn Bhd. You can search Phillip Futures in our Facebook, our LinkedIn, our YouTube, and you also can follow our Instagram page. Just look for Phillip Futures Malaysia. And for Telegram, Phillip Futures, we will constantly update all the latest news. Okay. 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 So if you are interested to open account with us, you can just directly scan here and fill up all your details and submit all the necessary documents. And if you want to know more about our platforms, which is Phillip Nova, you can also sign up for our demo. You can also just scan here and register. We need your name, your phone number, and your email address. So for you can see from here, for our Phillip Nova, we have more than 90 technical indicators. So you can buy and sell directly from the chart in one platform. If you wanted to trade local or foreign, you can just trade in using one platform. We have also live market news, and you also can view up to 4 live charts at one go. And before I forget, so currently we have a few ongoing promotion. So this is the US $2.50 for the US indices and silver, and the US Treasury yield will be from 1st of May to the 1st of July. And also we have micro crude oil, gold, and also China A50 at only $3. This will be from until end of the year. Okay, Shireen, I'll pass back to you. So that's all for me.
Okay, so thank you, Yongxuan, for your presentations. So if you guys have any inquiries, please do not hesitate to contact us, even through call, email, website, live chat, or Facebook Messenger. So our representative will contact you as soon as possible. So if you guys have any question or other question that haven't been answered, so you can contact us and we are happy to assist you. So for sure, we will contact you also for those unanswered questions. So last but not least, you guys can check out on our latest promo and grab the opportunity to join in. So with that, I will end the session for today. Thank you everyone for your time to join our webinar today, and many thanks to Miss Chan Yong-Shen on her insightful sharings. So good night everyone and stay safe. Bye bye.